So you know you're paying way too much in tax, right? But you don't know exactly what to do about it. You don't know all the strategies. You don't have the team in place. This episode is for you. Did you know that you can double the wealth that you net, that you keep for your family and your heirs just through smart tax strategy? Welcome to another episode of The Download. We have a special guest here. He is Michael Bosma, and he is not only let me see if I can get all this. He's a podcast host. He's a radio host. He's a CPA. He's a business builder. He's an entrepreneur. Did I miss anything? He's a father.
Father of nine.
Father of nine. Wow. And I recently found out that he's also a Christian.
Amen, brother.
I love it. So we're going to talk today about tax strategy. We're thinking a couple things because he is my CPA. He's the man who saved me millions of dollars. And I can only say that about one person. I think that's you.
I'm glad to serve you. Happy to serve you. But you have some good outcomes. That's why I do what we do.
The whole IRS thing it's so complicated for the average person, and it feels like, oh man, I don't want to deal with this situation. And you just have to have the right team in place, like Mike's firm, to walk you through what are the legal and ethical ways to do this. And he's incredible at helping you navigate and set your, circumstances up correctly and do the things correctly so that you can save massively in tax. We're all about paying as little tax as possible, doing it legally and ethically. So that brings me to this first idea I wanted to talk to you about tax strategy as a wealth building sort of principle. Like, how do you think about that as a human being, your taxes, and then your clients as well?
Well, first and foremost, I think it's the Honorable Judge Learned Hand. His quote was, "We're not under no patriotic compulsion to pay more taxes than we're required." So just, they said it's like you don't have to voluntarily pay taxes, right? This is something that's an excise. It's taken from you. So just pay it, do so legally. But I would say there's usually tax planning falls into one or two buckets. And usually this is where people that are selling schemes lose sight of this. And I'll give you an example. So I had one client, actually, she was a guest on the show, a couple million social media followers, kind of following after her footsteps. Like, this is how all the social media stuff goes. It's amazing. But she said, well, my CPA said, because I'm going to have this big tax problem, I'm going to buy some equipment. I'm going to lease it. This leasing company. I'm like, okay, it's an active trader business, fine. But how, you're going to put in $100,000, you're going to get $800,000 of deduction. Okay, you get it. You're on the hook. It's recourse, but this $800,000 deduction, it's part of the larger syndication. So it's really $8 million of equipment. I go, so did they tell you that you're jointly and severally liable for that $8 million of debt? Never mentioned that. Oh, well, look at the documents, because the only way you get it deducted is if it's at risk. So and that means you're on the hook. So you get your share. Everybody's equal, not equally on the hook, all or none on the hook. You don't know who these investors are. So why would you take that risk? Number one. Number two, I go, this is going to come unwound. This is a 5-year lease. Fine. So you get this big deduction today, right? $800,000 of deduction today. When they sell the equipment, it comes back at you at $800,000 of income. Right? Depreciation, year 1, income, year 5. Your tax bracket today is 12%. Your tax bracket in 5 years is 37%. Are you going to be able to make 25% off of that savings over those 5 years? He goes, no, I get like 4.5% on my money. I go, that's what I'm saying. All tax planning is really financial planning. How much? And I said, what I did is I said, well, what you need is, she owned a commercial products company. Told him about your journey, Judson. Not specifically, obviously that's confidential, but just I love your journey, right? Like, you're one of the most creative entrepreneurs I've ever met. So I'm a fan. Let's put it that way, right? So, but I'm like, so I told her, you just need a loan because you're building inventory. Building inventory that you're building in China is expensive. You got to pay for the ship, the container before it ever leaves port, right? And then you're going to monetize it 6 months later. So as you're growing and scaling, it's hard I get it. So I got her a loan. It was actually a New Markets tax credit loan for people that were female-owned businesses in certain areas that are deemed to be economically disadvantaged. There's tax credits incentivizing business there. She was in one. So got her $1,250,000 loan, at 8% interest, because you can make, doing the tax planning after fees, it just didn't make sense.
Yeah.
Because, that $100,000 she was putting down, she's never getting back. So that's where it's like, I made 300,000 in savings. It cost me 100. Then I got to pay it all. And they never talk about the unwind. And that's where you just need a loan. You're going to sell your business for $10 million. Great, right? We know how to do all those things. We're business brokers too. We can help you sell, but if you do this is how much it'll cost you. But you just do the loan. This is what you're paying interest. Call it good. You're fine.
Yeah. Yeah. So you're doing a couple things. You're thinking long term, right? You're thinking, okay, so you're going to get this deduction in this year, and what does that trigger in the future? And that's always something we have to think about with real estate. Like, you're going to get some real estate tax benefit, but you're going to owe that if you sell that property and you don't 1031 exchange it. So you have to have a long-term plan for whatever your tax strategy is going to be. And if you don't have an advisor who's talking about that, you got to be careful.
What question?
Yeah, exactly. So what you did is you transitioned her into a loan, because ultimately that was actually going to net her more money in the long term. Even though she would have got a shorter term, she would have got more money in the short term. She would have felt like, oh man, I got a really good tax strategy. I did something great. But she didn't realize how it was going to bite her on the back end.
Right.
Yeah.
And that's what, having to tell is like, oh, I didn't know, right? Because they're, again, these people are syndicators, they're marketers, promoters. There's a nice fee in it for them to sell it, and they're not CPAs, and they don't have to tell you the truth. They can tell you whatever, it's on you.
Yeah, right? And they're not going to be there when that happens 3 or 4 years from now. Right.
They got their fee.
Yeah, exactly. They got their fee, and maybe they won't even exist. Okay, great. So in terms of it, so I think that's great in terms of like wealth building for taxes. One thing that I always say is, we as human beings, as Americans, I think actually in a lot of countries, we end up paying about 50% of the money that we make in our lives, we pay to taxes of some form. And so if you think, oh, well, I'm going to actually end up I'm going to net half of what I make for my life. That's like a startling truth where you're like, oh my gosh, right? And I just find it's one of the most time efficient and capital efficient ways to build wealth is tax strategy.
Right. No question. And that's where the other bucket, which we talk about timing. I mean, great. I get it. But the better one is permanent, right? Permanent instead of timing, permanent benefit, right? And people are like, well, how do you do that? Well, think about a Roth IRA, right? Talk about a backdoor Roth IRA. Talk about these, IRA to Roth IRA conversion. So, actually the same lady that I was talking about before I got her loan, I said, this is what you're going to do. I go, you're going to max fund, because she has got an income tax problem. I go, you're going to max fund your retirement. We're going to put in $70,000 in your retirement this year. And to do that, we're going to put in $236,000 of wages so she can get the benefit of this thing called qualified business income deduction. And then that'll give you the wages to put your 70 grand into retirement. And then because her investment strategy is to ultimately, when she monetizes from her business, to buy real estate, I go, then you're going to do this cost segregation when you do the real estate. So you're going to sell your business, buy real estate, and then we're going to do this cost seg study. It's going to wipe out all the tax. You're going to convert that IRA that's pre-tax into post-tax. And then it's going to grow forever. She's 34 years old. You're going to grow that thing hopefully for 40 years. It's going to be worth millions at the end. Right, and that's that's permanent, because you took a little bit of haircut on the front, although we offset the income through a tax efficient strategy, and then it sits and it grows into millions. And those things are fun. Same thing with tax credits, right? You're like, okay, that's a 1-for-1 benefit on tax rather than a deduction where you're saving 37 cents on the dollar. You're saving dollar for dollar, much better.
Yeah, we can talk about some of the tax credits that you think are exciting currently, because maybe I should take advantage of some of those. But just to make sure I understand that strategy you mentioned, so you've got someone who's earning a W-2 wage, and they have a business, so they can decide how much they're going to take on a yearly basis, right? So sometimes they're taking a big chunk, or sometimes they're taking less. So you're suggesting they take a bigger chunk this year and put it right into a Roth IRA, correct? Because it has to be wages.
It has to be wages, and then depending on where you're going to be, so you have to do this analysis: today versus tomorrow, today versus when I retire. What benefit am I getting today? If you're going to get the benefit at the top marginal tax break, then take the deduction, because it'll come out in the same way. It'll be taxed later, then it'll grow in there tax free. But if you're at the low end of the bracket, 10, 12, 22, 24%, don't deduct it, because it's going to be coming out at the top bracket later as ordinary income. So that's where you're really looking at the time value of money and how much benefit you're going to get to put it in pre-tax or post-tax. And then and the reason I like that real estate play, like let's say we put it in, into the Roth, whatever. I have it in pre-tax and put in a regular IRA, regular 401k, get the deduction. Then I do this conversion 3 years from now, 4 or 5 years from now. You've got a couple $100,000 there. Convert
So
that.
You're converting a regular IRA to a Roth. Is that what you're saying?
Correct. That's correct. And currently there's no limit on how much you can do. Now, and that's where you look at, okay, the secret sauce there is, contribute up so you could get up to the maximum amount, 24% bracket. And because you don't want to convert at 37 unless you've really got something special going on in your IRA. But if you can convert at those lower brackets, and then what it can grow to, you'll make millions of dollars. But the thing I like about the real estate play is, a lot of times real estate is a good piece of your investment portfolio, right? And for all the reasons people like real estate. So if you put that money in the real estate and then do this cost segregation study, I turned the camera around, except I completely messed up the recording. But like I'm sitting here at my condo on the beach in San Diego. It's pretty, it's nice to look at the ocean, all these things. So when I bought this thing, right, it's a short-term rental. I did my cost segregation study on it. So I got my nice 25% of what I paid for it as a 1-year deduction. Okay, I'm never going to sell this place. So when I die, I'm going to get a step up in basis, right? So then all the depreciation I took this year, I never have to pay tax on later. So, and that's where I did that exact same strategy. The year that I bought the condo, got this big deduction, I converted a bunch of pre-tax to post-tax because I was going to use the benefit for the cost seg to offset that conversion. Then I put a lot of money into a Roth, and that's where people are like, how'd you get so much money in your Roth? It's like, I know a good tax guy.
Yeah. So let me see if I can break that down to make sure we all understand. So we have so I did something similar, right? When we sold my company, you suggested I buy real estate in the same year that I sold my company because I was going to have a huge capital gains tax bill. And when we bought the house up in the mountains, we were able to take 25%. So we got a huge tax deduction from our capital gains. And that included the real estate professional status. Yeah. So
yours wasn't a short-term rental, but you were a real estate professional, right? More than 750 hours, more than 50% of your time, because you sold the business. So now I'm available, backed it, then you're golden.
Yeah. And then the difference, just so everyone's clear, with a Roth and an IRA, I think most people know this, but maybe some don't. With an IRA, it's a tax deduction when you put it in, right? But it's not a tax deduction when you take the money out. So with a Roth, everything that it grows, so let's say it grows like 30 years, like he's suggesting, you buy NVIDIA or you buy Bitcoin inside of your Roth, and it grows thousands of percent over the course of your 30 years or hundreds of percent. All of that growth is not taxable. And so at the end, you take it out. And the other piece you said, you take it out tax-free. The other piece you said was a step up in basis. And I think that's maybe gobbledygook for some people. So to break that down, we're saying when you die, the appreciation of your property or your, I guess property it's not your.
It's property. It's everything you own when you die.
Yeah. Your heirs are not taxed on the growth. So the basis, the cost of it steps up to where it's actually valued at that point. So this is part of the long-term strategy of wealth building for generations, which we talk about on this channel all the time. A good man leaves an inheritance for his children's children. This is one of the main biblical strategies for, generational wealth, is this step up in basis.
Right. No, absolutely. And that's where people, they lose sight of that, right? So that's where if you die with money in your IRA, you don't get the step up. It's called income in respect of decedent. So now your heirs are going to pay tax on that income when it comes out. Versus, I mean, I get about a $500,000 1-year deduction when I bought my condo. It was great. So that 1-year deduction, but now it lowered the base of my property. So if I sell it, I'll pay gain on it. I'm never going to sell this place. So when I die, right, hopefully it's worth a lot more than what I paid for. It doesn't matter. But especially in California, as you know, Judson, right? You want to hold this thing generationally because of Prop 13, so they don't keep jacking up the taxes, right? So it's low tax base, but you get to step up for tax purposes. So that way, whatever it's worth, I never pay tax on that $500,000 of depreciation I took, ever, right? That's the game, right? That's what people just don't understand. Like, you want to keep the low tax base, like from property tax, and then never pay tax on that deduction. So that's permanent planning. Way better than just, I got a deduction here, I'm going to pay tax on it tomorrow. No, this is gaming the system so you never pay tax on something legally. There is nothing risky about that. That's what I just let people know, Judson. It's like,
right, exactly.
There's things you can do that are way down the risk profile, and that's okay. I mean, there's people, when I meet people, I do onboarding with clients, I say, a scale of 1 to 10, how risk adverse are you? And some people are like, if I get a notice from the IRS, I'm going to pass out. Like, okay, then you just stay in the center of the center lane, brother. You're fine. I have those strategies. But people are like, I'm not going to go to jail. Like, well, me either. So we're aligned there. So, but I can play it, pretty far down on the risk.
But don't you think though that the whole IRS system, the 80,000 pages or whatever of tax code, and the way that they talk and the way the government talks about the IRS and the whole thing is a psyop to make us afraid. Don't you think that's part of their strategy? I don't know if you can speak openly about that, but
no, it completely is. Just believe me, I've got over 100 IRS audits I'm defending. Again, not my clients, right? Other CPAs, and they're like, this is over my pay grade. Because everybody can talk these, platitudes, generalities. Oh yeah, I do a cost segregation, and then you find out like the mechanics. I've got Cody Heimerdinger in my office. He was with the National Tax Office at Clifton Larson Allen, top 10 CPA firm, right? Doing cost segregation studies. He knows these things backwards and forwards, right? But you don't just put the numbers into the software and see what kicks out. So you do that, and then it's audited. Then you're trying to defend it. Like, you can't do that because they don't know, right? So, and I guess, saying that, if the IRS knows that, so all of a sudden you get notified of audit, everything in that process is designed to intimidate you. I kid you, I had a client in Detroit, Michigan. He had the CLLC, he gets audited, his CPA went out of business. He did have a CPA, he went out of business. All of a sudden I get these referrals in, hey, we're getting audited, we need some help. I understand you're the guy. I'm like, yep, okay, we can help you. That IRS agent said, you have to be here on this date at this time. Not when can we schedule it. You have to be here on this date at this time. So I get my power of attorney. I call the agent. I go, well, hey, we're going to need to reschedule that. I'm not rescheduling it. I go, I'm not available. I'm in Reno, Nevada. Not Detroit, Michigan. Let's just do it on Teams. We can do it on your time. We can do it on Teams. We can do it on, whatever platform you want. Do it on. Oh no, I demand to talk to the taxpayer. And then the next day he goes to the taxpayer's house and duct tapes a summons on the door. You must appear. You must appear. So I call up the agent and I say, you really, we're complying. We're here. We'll give you everything you need. I want to talk to your manager. I talk to the manager. I go, I'm not going to let you talk to the taxpayer. You can talk to me. And they go, well, we demand to talk to the taxpayer. I mean, just tell you, it was like Big Brother. Oh, this is terrible. And so, and I said, well, I have dozens of other audits. I can help you understand across the nation. Nobody else is demanding this. It's an unreasonable request, right? And he yelled. I get yelled at by a manager. He goes, that's not how we do it in Detroit. And I'm like, so I tell my client, I go, well, I can quash that summons. I can tell them, too bad, so sad. But we're not being all nice and friendly with our IRS agent. So and we don't have to be, by the way, right? And so it's my client. It's his case. What do you want to do? He goes, I don't want to upset him anymore. We're going to go. So he flew me to Detroit, go to have the most BS meeting I've ever been in. It was terrible. It was all designed to intimidate. Right? And so, I walked out at a 4-hour meeting, 2 agents. I said, we're done. Well, we had it for the day. I said, no, you don't. We're done. These questions are repetitive, duplicative, right? And there's nothing new that you're asking for. Anything else, simply put it in an information document request and we will comply. Walked out, gone. Right? I go, because, and I was trying to, I guess, coach my client on the front end. It's like, no matter what we do, and he's like, no, I'm really, he was afraid, right? And I'm like, again, my job is an advocate for the taxpayer, but ultimately it's their audit, right? So it's like, I don't think we have to. I should say, I know we don't have to. He's trying like, hey, I don't want to upset him. We took a pretty aggressive position. That's fine. Okay, I serve at your volition. I will. So, but it didn't, and that is the worst that I've ever had it. But I will tell you, as soon as I can't tell you how many IRS agents I've trained, probably hundreds. Right? They come at you like this, and like, well, let me help you understand how the rules work. When Joe Biden hired I think it was 80,000 agents, talked to a whole bunch of them. I mean, Judson, a bunch of them, they don't speak English.
Wow.
Right?
Wow.
They're trying to have a conversation with you, asking these really technical questions. They're reading off a sheet. They don't know what the rules are, right? They have no idea what a real estate professional is. They just, you can't deduct your, this is passive activity. I said, well, no, he's a real estate professional. Well, what makes him a real estate professional? Okay, well, let me tell you. Code section 469, trade or business, a real estate professional. In the trade or business of real estate, more than half your time, minimum 750 hours.
That's crazy. So you're literally educating the IRS. That's the thing that's crazy is they make us afraid and then they don't even know what the rules say. And it's like, you have to educate them. It's insane.
Imagine, that's what I say. Imagine, right? If you're not an expert on these matters, and that's why I say, you never send a taxpayer to talk to the IRS alone because they will incriminate themselves, right? Because they don't know, right? Great question, right? It's like, oh, you're taking automobile expenses. Do you keep a log? Does anybody keep a log, Judson? No. Nobody keeps a log.
No.
But if you say no, right? If you say no, then they're entitled to deduct every penny of automobile. So you can't say no, right? And so what you say is, well, we did a sample log and then we did an estimate and extrapolate that over the sample year. Oh, that's okay. Does any taxpayer ever know that that's it? No, of course not. You would never wish that level of detailed knowledge on anybody.
You know what it reminds me of? It reminds me of my daughter's freshman math class. It's like, it's not about, we're living in insanity because it's not about getting the answer correct. It's about doing the work the way that they want you to do the work.
They want you to do it, right.
And it's insane. It's like, I'm trying to help her with it. I have no idea. This makes no sense, but I know the answer. Right. And it's like, that's exactly what this sounds like. We're living in a crazy world. So we have to understand, you called it a game earlier, and I think that makes people, and I call it a game too. I think money is a game, but it makes people, it sounds like, oh, that could lean toward being unethical. No, we are not talking about anything unethical or illegal. Mm-hmm. These are all absolutely ethical and legal things. So the Bible says, pay unto Caesar what's Caesar's. And at that time, it was in the biblical era, they paid about 10% in tax, and Caesar was trying to get all kinds of other tax. 10% is what we should be targeting. This is just my theory. But if you're paying 37%, you're paying way too much. There are strategies that you can take that the government has written down and the IRS may not know them, but you can do it. You can know the tax and you can work with a team that understands. And if they audit you, you're going to be fine. You do not have to be afraid.
No, that's 100% agree. And that's where, I think, people get intimidated and then they see, these scammers out there. And that's why I'm just such a fan of just, I work with so many other CPA firms now. So that's how we're growing. I made Inc. 5000, fastest growing businesses. right? Very blessed, have a great team, and just, very honored that God somehow, kind of put some grace in
I
my
know
life.
how he
Things
did it. I know how he did it, Michael. He
Hmm.
talks, the Bible talks about how when we are faithful with the small resources that we have, when we're faithful in the beginning, that's when he gives us more. That's exactly how it happened for you. You were faithful. You're doing your work well, and then the increase comes. That's
Right.
exactly. But anyway, I cut you off.
No, no, yeah, I was very honored, very humbled, but yeah, and that's where I think, I had a true story. I bought a CPA firm, and one of the people that came with that firm used to work for the IRS, right? And he was in our tax solutions group, so he was, hired to kind of defend audits, help with notices, that kind of stuff. I had an audit out of Shreveport, Louisiana, right? And the agent was so terrible, right? He sent me an email, right? And he says that, that agent's gonna give me a referral. Now what that means in IRS speak is I'm gonna report you to the IRS for proposing this tax deduction, right? And he quit. He was just like, oh my, I can't be around this. And I'm just like, okay, God bless you, right? I wish you well, nothing but the best. So, so I remember talking to that agent, and she same thing, like, oh, well, you can't do this, right? I'm like, well, code section 172, blah 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 says I can, but why do you say no? I don't even understand, right? And I completely turned it on its head, because she was like exasperated, like, what are you talking about? You can't do this. And I'm like, well, here it says right here in the Internal Revenue Code you can. So tell me where I'm wrong. What am I missing, right? Oh, well, I've never seen that before. Not my. I don't know what you've seen. I've seen a lot, but I don't even pretend to say I've seen it all. So I'll go look it up. What are the rules? But that's where, they scared off one of my employees. Now, in the benefit of hindsight, it was probably a blessing, Judson. But you know what? It's just like, it's also, you have to stand, lockstep with some sometimes difficult situations, and go to battle. It's like, okay, they disagree. We have our opinion. You have yours. Okay, we're going to lock horns on this one. Fine, right? But if they know that that you're just going to back down as soon
Right.
as they puff up, you're
Yeah.
baked. You're
Yeah.
done.
Yeah, and if you know, and your CPA knows the rules, and this is what it says, and we're going to follow them to a T, and we're going to do it all right, which is what we've done. And I have a pretty advanced tax strategy, or I have, and we just knew. We talked exactly through. Okay, here's how this works. This is exactly what you need to do, what you need to set up, and we're going to be fine if an audit comes through, and we have been. Is this why you think so few CPAs are tax strategists, and why, it's like your general CPA, this is my interpretation, you would know better than me, is that they're basically just filing your taxes. And yeah, you can write off this or that, but mostly they're just trying to make sure you're not audited. And they're not discussing with you your tax strategy. So if you're not talking to your CPA at this time of year, sometime around now, or October, September, October, about tax strategy for that year, planning out, okay, this is how much you're going to make. This is what we need to do. Let's put this in place. Let's not do this. Let's do this for next year. Let's think about a Roth, all these things. Maybe this would be a good year to transition your 401k to a Roth, or your IRA to a Roth, or whatever. Then you're not working with a tax strategist. You're just working with a pencil pusher. Why are so many CPAs that way? Why is the industry that way?
Well, number, I think it's twofold, Judson. Great question. Is one, I think you have to appreciate the DNA of somebody who goes into this profession. If you're going to go out trying to do all this creative stuff, you're probably going to become an attorney,
Yeah,
not a CPA.
right.
CPAs, right? I'm good at math, logic, reason. Keep me, keep me in my lane. That all, typically the DNA of somebody who likes this stuff. They like rules. They like following rules. Is that tax strategist is somebody who really takes an interest in what the rules are and tries to exploit the rules. Now, I'm not saying exploit from a
Yeah,
bad perspective. I'm
yeah,
saying exploit from a, and I'll just give you, I'll give you an example, right? I'm working with another CPA firm, really long-standing CPA firm, great CPAs. I got referred in by their attorney because they're like going, guys, they're telling them that they're going to lose these millions of dollars of deductions in this reorganization. And like, can you look at it, see if you can help? So I looked at it, like, well, they're not wrong. And that's what that question they asked was, if we do this, then what? And they said, then no deduction. And I remember I started my career at a firm called Deloitte & Touche, largest firm on the planet. And I remember my senior manager says, there's doing some restructure work, and he came down to my little cubicle. I'm like a 2-year guy, right? My cubicle, because he goes, if we do this, move this corporation, do this corporation, and kick this out to the shareholders, it's taxable. So I look at it, and yeah, it's taxable. Okay. Well, what if we do this other thing? Like, I go back to my desk, like, it's taxable. Then I went back, I go, Charles, what are you trying to get at? Well, I'm trying to make it non-taxable. Like, why don't you just ask? Like, do it this way, and you'll be non-taxable. I'd spent the better part of a day reading Section 368 about how corporate reorganizations work. I was like, okay, if you do it this way, then it's not it's called a divisive de-reorg. It's a divisive de-reorg. It's not a device to extract earnings and profits out of the corporation. That's going to be fine, right? Wrote the memo, done. So it's the difference between what is the answer versus what could the answer be, and they're just different people.
Yeah. Yeah, and you're one of one of the unicorns where you're an actual entrepreneur and a CPA, and so that it's a unique, I've gone through quite a few CPAs to find somebody like you who's actually able to do both.
No, I appreciate it. Blessed, and it only works because I got a whole bunch of people that are amazing practitioners. So that because if you tied me to my desk and made me bang out tax returns, I would probably retire.
Yeah, exactly. It's like Steve Jobs or whatever. If he didn't have Wozniacki, he wasn't going anywhere.
Right.
And it's like that combination of, and that's why we need a team, right? If you're building a business, you need a team. If you're building wealth, you need a wealth team. And tax attorneys also are part of the equation. I have only used them on a limited basis. When are the times is that more tax strategy, or is it sort of like bigger corporate things?
Actually, it's interesting. I have 2 tax attorneys that are part of our team. They don't practice as attorneys, but they help with a lot of our more sophisticated planning. And I would say our firm, I am very, very blessed. We have, when I'm helping these CPAs through these audits, they get in this bind, or, they have a technical question they can't seem to crack. Our firm tends to be a good resource for them, kind of like a national tax office in a larger firm, right? But so a tax attorney, and really what makes them great is if they have this thing called an LLM in taxation, which is an advanced law degree, and they've taken all the tax classes, so they know all of it. And so, like I had, and so, I think I've got 6 cases right now in the U.S. tax court. So, and I can do that as a CPA. So I can actually adjudicate that case in the tax court. I'm there as a subject matter expert. I'm going to have another law firm practicing law actually work through the nuances of adjudicating a tax court case. But the reason you do that, the reason you need them is, when you're trying a case, evidence, discovery, depositions, you need somebody that does that all the time, right? So that's, so that's where you just stay in your lane. We're really, really good at what we do. If all of a sudden you're going to court, going to trial, you need a tax attorney. You also need somebody that's really robust on the technical nature of whatever you're talking about. So like on this charitable giving strategy, we're hiring a firm actually just right down the street from you, Judson, that has all kinds of experience in it. So they're engaging us to be the subject matter, us as Keystone CPAs to be the subject matter experts on it, but they will go through the back and forth with the tax court, with the IRS side, their counsel, on working it through the system, right? Because that's not something that we do every day. They do, but they were already familiar with the CLLC strategy, the charitable giving strategy, so I didn't have to bring them up to speed on it. So I had other people like, I had every law firm on the planet asking like, hey, I think there's going to be a fair amount of litigation on this topic. And they said, I want to be the attorney. I go, what do you know about a CLLC? And like, well, nothing. I go, whatever their rate is, $4, $5, $6, $7, $8,000 an hour, whatever. Like it's going to take. I mean, I've got over 1,000 hours getting to where I'm at. Like if you had to do it doesn't make sense, right? So they're going to have to learn that technical on your dime, and to do it for one, it just doesn't make any sense. Fortunately, there's not a lot of new art that like this is that's being addressed with the courts, but most of it is more factual, did this conform to the law or not? Not something, is, new art, which is this deductible?
Right. Right. Okay, so that's sort of that's some more of the high level stuff, and I think there's a ton of great info in there for folks who have higher net worth and businesses in place, and they're making a lot of revenue. And we gave them a couple really good ideas there, and some high level on what how to be thinking about this. You really have to be thinking about your tax as wealth building and generational. That's when you really start to unlock the big wins. And in terms of, so we're right now we're in October, and I tend to use this, like I was saying, I use this time right now to think about, let's make sure I have everything in place for this year in order to optimize my tax for this tax year.
Right.
And so I'm sure you're having a bunch of those calls with clients and stuff. What should people give us a couple like main areas that we should be thinking about in terms of like stuff that maybe we could do or things that we need to have in place by the end of the the calendar year, because taxes they're not everybody does the calendar year, but most people do, right?
Most people do, right?
Yeah. So on December 31st, if you haven't done whatever it is you need to do, it's not going to be applicable for your 2025 taxes. So like, for example, if I had, so I sold a company in whatever it was, 3 years ago. If I hadn't bought the real estate that year, it wouldn't have offset my capital gains for that sale of the company. I had to do it in the year. So that's why we tax plan in October. So we have a little bit of time to enact a few things. Like, let's say we want to pay our kids, or let's say we need to, oh yeah, my home office, I need to get that all set up and ready to go. So I understand it. What are some of those strategies that people can be thinking about by the end of the year?
Well, let's a couple buckets, Judson. Great questions. First and foremost, probably the number one misunderstood tax hack is paying your kids. So, and I'll tell you how this happens. It's, again, the most well-intentioned. This is, you have your S corporation. I'm going to pay my kids out of the S corporation. It'd be great, right? And so you pay them up to $15,000 a year because they're not going to pay any tax on it. Yay, you. Well, $15,000 a year, you're going to pay FICA and Medicare on both the employer and the employee-employer person. You're a couple grand in FICA and Medicare. Did you know that if you paid them out of your partnership that you and your wife own, or out of your sole proprietorship, that the FICA and Medicare is zero? So so just pay them out of your sole proprietorship. And so I had one of my clients, and actually I love this story because it was very effective for raising his kid. So he's a general contractor. He owns his own commercial office building that sits. He says, I want to put the kids to work. I go, great. He has an S corporation for his general contractor. I said, what you're going to do is we're going to set up this other entity, single member LLC, that's going to be contracted to clean the building. Well, why do I want to do that? I just pay him out of there. I said, because it's going to cost you extra two, and he's got 3 kids. It's going to cost like an extra $6,000-7,000 a year in FICA and Medicare if you just pay it from their S corporation to that company. We're going to do a Schedule C on your tax return, right? But now all that money you paid your kids isn't subject to FICA and Medicare until they're 18. So it's just. I don't know why, Judson. I love this stuff. It's just like, is there a way that's like a tax hack, right? If I can save somebody $7,000 a year by paying their kids just out of a separate entity than that one, right? Over time, that's going to make a lot of wealth for that family instead of giving it to the government.
That's right. No, the thing that unlocked it for me, I think everyone should get excited about this because it's literally half your money. Some of that tax, we have no choice. We're paying the gas tax no matter what, unless you get a Tesla like me. There are many taxes. We're paying sales tax. We don't have a choice. But most of this, income tax, there are these strategies. So let me see if I understand that strategy. I've heard this before. And I don't have this set up. I was thinking about setting it up. Is like a Morgan family operating company, right? And so you're saying that it doesn't need to be an S corp. Shouldn't be.
It should not be an S corp. It has to be an LLC. And the reason you want to make it an LLC, so let's just continue that strategy, because the kids, they in my experience, Judson, like I said, I got a whole bunch of kids. So the kids, they're always going to need mom and dad's help and you're going to want to help them, right? We are blessed. We're going to love on our kids. That's just how it goes. And I'll just give you the strategy. So I have one of my adult children is getting married, right? So he sends me an email saying, I need some love for the wedding. Can you help with the wedding? And I said, well, what happened to tradition where the wife, it doesn't matter. So I said, of course, they're going to, how much help do you need? It's about 10 grand. Like, I'm on it. My DNA is I cannot give somebody $10,000. It's not how the good Lord made me. But because it's completely tax inefficient, right? So I give you a gift of $10,000. I pay 37%, plus 2.9% of Medicare. How about if I just give him an income interest in one of my entities, one of my LLCs? And I can do that. The annual gifting level is, I think it's like 19 grand a year. So I can give that to anybody for any reason every year. But I can give them a profits interest in one of my entities that will only last for a year. 1 year profits interest for $10,000. And I have a number of LLCs in my world. I did a formal gift, and I wrote them into the operating agreement. You have a profits interest for 1 year for $10,000. Now, what that does is it takes $10,000 would have been allocated to me, paid 37% on. It's going to allocate to him. Now, he's at the 24% tax bracket, so we just made some tax arbitrage there. But the thing that I really, really, really like about that strategy is that entity that he got that profits interest from, he's going to qualify for he'll deduct the qualified business income deduction. So he gets, instead of paying tax on 10, he pays tax on 8. So it's always better to pay tax on 8 than 10. So it's a very efficient way to point income to him. Now, and then he's going to say, I already know that's going to happen. Dad, I got to pay tax on that. You want me to cover your tax too? What are you talking about, right? The tax guy. Like a lot of people when they turn 18, so let's just continue this thought. The Morgan Operating Company. And you put your kids on payroll. Now you have to pay them what is a reasonable wage for whatever they're doing. And one way to do that, you go to, actually ChatGPT now. It's just fantastic. But it used to be salary.com. But okay, how much would I pay somebody to do this? You just document it. Fine. But then the thing I love about that is then so let's say you're going to go do the whole 15,000. Every kid 15,000. Going to pay them a W-2. You put that W-2 in their bank account that they probably don't even know exists. And then you pay all their money for all the stuff that they do to consume wealth because they're little cherubs. They're expensive habits, these children, right? But then you just pay, like I look at my debit card out of my wallet, child A, B, C, D, E. And so I'm paying this for him. That's out of his account, his account, his account. Now, and that way you're just spending it for their benefit because you're not going to give your kid $15,000, or if you do, they're probably going to do bad things with it. When they become an adult, when they turn 18, now I do a gift of my operating company, right? Like in this case, $15,000 gift to Morgan Opco, right? Every year, make that annual gift. Now you're going to allocate $15,000 to them, but you're not required to give them the cash. It stays in the LLC. You can make distributions for their benefit, which is basically writing LLC checks for whatever. Now they're talking about college, or I paid for prep school this way. I'm going to college prep school. Like I say, you got a freshman. Hey, if you're paying for tutors, all of it, I just pay it all out of the LLC. And that way, when you do that, you're not giving it to them, you're spending it for their benefit. But basically, when the math settles, you go from 37%, or in California, 50% to 0. You double your money.
Yeah, you double your money. I think I understood that. So I think so Morgan Operating Co., is that the LLC that's paying for their tutoring or college or whatever?
Correct.
Right.
And that doesn't mean you don't get a deduct. I don't want to make sure I'm clear. You don't get to deduct it, right? You can't deduct the children's prep tuition, whatever. But if you allocate profits to them, right? So after they're 18, you allocate profits to them. Then that's earned income. So that way the kiddie tax doesn't apply, but then you can stroke those checks out after they're 18. Before they're 18, they're going to get a W-2. You're going to put it into their savings account and then spend it out of there, not the LLC.
Right. Yeah,
these are the more complicated it needs to be.
No, that's the thing. That's the thing. It does sound complicated in the beginning, and often these things do. And that's, I think, where people are like, "Oh man, forget it." But this is the thing. If you just remember, it doubles your take home. It doubles your take home. How hard are you working for that money? You're working extremely hard for that money. It's way less time. It is brain damage, as you like to say, Michael. But there is brain damage involved. But there's a lot more brain damage to be half as wealthy.
Right.
And by the way, it's worse than that because you're half as wealthy now today, but that will grow over time. It's like,
It compounds.
yes, it compounds. The money you make now compounds through your life and through your children's life. It's such an exponential return that it's worth it. It is worth it, and it is a little bit of work, but it's
Well,
less work than earning that money in the
so it's
first place.
less work than work, right? But I'd also say, I think why people kind of they roll their eyes in the back of their head on that, because one of the things that when you were talking about, this season of the year, last quarter, where you're doing tax planning, how are we going to land this plane? Most people don't know where they're at financially. That's the problem,
Yeah,
right? They don't have their
yeah,
accounting set up so that every month they know how they did. It's funny. Whose kids have the worst shoes? The cobbler's kids, right? So I'm no different. So I hired Keystone, my CPA firm. I said, we're going to set Bosma up as a client, and we're going to get I have my businesses done there, but my personal done there.
yeah.
It was shocking, Judson. I remember I'm sitting, I'm talking with my chief financial officer. His name's Ted Pickeys, and I'm like, what? Wait, it's just. I can't believe this thing is just this out of control. We had every subscription 3-4 times. I'm like, well, this time we are not being good stewards of God's good. It's just this is a stewardship issue right now. So, but once we got that done, then the maintenance of it was super easy, right? So every month, boom, boom, boom. How do we do? How do we do? How do we do? And so if we had that in our business, if we had it in
Yeah.
our personal financials, then when I can, hey, how are we doing? Basically do one report, add them all together, different companies, okay, personal, this is kind of where we're at. I'd be able to have a conversation in a second if I knew where you were at, right? Then we got to do this, and the other. But the reason people don't do planning is they don't know where they're at. They wait till after year end, which is a mistake, to figure out how much money they
Yeah.
made for the prior year.
Yeah, that's interesting. I don't think almost no one has the personal books set up. So, because I've got all my businesses, my bookkeeper's doing all of that. How would I have that set up? Is it just basically I treat it like a business,
Just treat it like a business,
and
right?
my bookkeeper goes through all the,
Yep. It's
and you create a profit and loss statement for your personal.
profit and loss and balance sheet. No, so
Yeah,
the
you need
balance
both.
sheet is important, and really
Yeah.
more so. Every year I tell people, it's like, if you really want to see how you're tracking, do a personal financial statement every year. Okay, just whether you need it or not, whether the bank requires it or not, just these are on my personal in my personal world. This is what I own, this is who I owe, and this is what I'm worth. And then I have that's one column, and I back out all my personal stuff. So the house not included, vacation condo not included, right? Because ultimately it doesn't make money, it loses money. But what I want, and every year I have a bogey, I have an amount that I want to increase my investable net worth by, right? And because that's really, that investable net worth is what's going to, pay the bills once I'm not being a CPA anymore. And all I'm trying to do is take the income I make as a CPA and business broker, and I guess financial advisory too, take that income and then put this much over to be an investable asset, so that ultimately when I'm not working, sweat of my brow, I'll have income to replace what my work used to do. And it's just substituting work for return on investment. And I think, and I just track that. I have a goal every year on what that number is. And that just gives me peace knowing that I'm on track. And I think probably, and when I started that, the first year I started Bosma Group CPAs, 2007. Worst time on the planet to start a CPA firm, by the way, right?
Of course.
But it was all right to turn things upside down. But And I said that year, because it was all hands on deck. I had the kids working, I had the wife working, everybody's working, trying to, because I went out on my own, started with a basic zero ledger, and then we had a great year. God provided. It was awesome. And I wanted to take the entire family after that first busy season on a cruise. And that was going to be, I think at that time, about $20,000. And I'm just like, I just don't know, if that's just prudent to do. I just started the business. Yeah, we made good money, but the fear, the uncertainty of the future. And then I went back to my personal financial statement and I said, this is how we're going to finish the year. I'm now, I was tracking, but now I'm ahead of where I was. So I think we're fine. I can spend the money because I have enough, I'm beyond where my projection was and where I should be at the end of that year. And that gave me peace, right? Otherwise, believe me, if I'm wrapped, I'm kind of tightly wound already. I'm no fun on vacation if I'm all stressed out about how much vacation's costing. So that gave me the peace to go enjoy a nice vacation.
Yeah. Yeah, you're so right that there's something about knowing your numbers and all the way down to your personal numbers because I think that's what most business owners do. They understand their business numbers, but they don't understand their personal numbers. And it's even as I have a net worth document that I update, but I haven't done the personal, P&L and balance sheet for our, family. I haven't done that. And so I have a bookkeeper because I have businesses, but if somebody doesn't have that, how would they go about making this happen?
Well, and there's a couple softwares out there, Judson, that you can do it automatically. I mean, it's where they'll import your bank statements. They're not as robust as like QuickBooks Online. And QuickBooks Online is like $500 a year. So if that feels like that's not paying somebody to do it, that's just for the software, then it's probably not your jam. But there's free ones that are out there and that just automatically do it. And the functionality is not as robust, but that's okay. You may not need it. But the other thing that I'm just a fan of doing, so whenever I have, usually it's one of my kids, but I've had a couple of clients do this over the years. They'll just like, I need some help with finances. Now, in fairness, I've come to learn that what that means is they want me to pay off their credit card, but I can't do it. It's not my DNA. But so I say, here, give me 3 months of bank statements and credit card statements. I download it all to Excel. I kind of have this way of sorting it all, right? And then I put it in buckets. And so then we do a pivot table. Sorry to geek out a little on you, but you then throw it in a pivot table, and like you can tell by month everything that you've spent, because we kind of know where our income comes from. That's the easy part. Where
Yeah.
did it all go?
Yeah.
Put that into that pivot table, and then you're like, oh, this is how much you spent. Yeah, I had one of a mother for one of our current foster children. She was really struggling paying her rent, and she's like, I can't make ends meet. I said, well, give me 3 months. So we logged into her account, downloaded 3 months of bank statements for her, put it all into Excel, boom, 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 boom. And I was like, Alexis, you actually make plenty, right? I go, but it seems like your two guilty habits are one, you buy all your food at the convenience store. I didn't know you can spend so much money I don't know what you would want to buy at the convenience store. But anyway, in her culture, that's just what she did. So it's like there was a Smart and Final like around the block. It's like just walk another block and go to Smart and Final. I go, that's going to cut your food bill at least in half, probably more, and the kids will be eating better. I go, but number two, you got to stop paying to call the baby daddy, and he's in jail. And they're like, you're spending hundreds and hundreds of dollars a month, and so it's like you can't afford it.
Right.
And I think once you see it, that's you can't unsee it. So you're like, oh, this is the issue, right? And I just think a lot of people don't do that because they don't want to know what the issue is, right? They know they got a problem. Like knowledge is power. If it's your money, you can do with it whatever you want.
Right.
And like when people talk about savings, it's your savings. You can spend it however you want. Don't spend it all, and then now you're forced to kind of live this other life you'd rather not. You pick the life you want to live.
Yeah, and there's a certain amount of like head in the sand or ignorance about it, and it's similar to the Peter Drucker idea of you manage what you measure, right? So if you're measuring and looking at something, if you're reading the Bible every day, that's why we do devotional, right? Like people are like, you got to do your devotions or something. It's because when you meditate on that thing, it becomes your
Who you are.
character.
Right. Mhm.
Yeah. And so when we put our head in the sand about our finances, about our taxes, about our, our growing our wealth, or what's going to happen to my money for my children or whatever, if you put your head in the sand about those things, you're going to be making bad choices that you don't even know are bad choices.
Right. Well, and I'll give you this just real world example. I was trustee um, for some people that just had some personal issues. They couldn't pay their bills, so I was appointed as a financial guardian for them. Just pay their bills, fine. And they had some drug issues. They had some demons they were trying to excise. Let's put it that way. But I remember this one time. So mom and dad, they were split, and we're paying the bills, no problem. And they were very blessed. They had a business that provided for them. But then mom and dad decided to reunite, and they went on a bender, and they both ended up in jail, which was tragic and terrible. 16-year-old son calls me up, and he says, "Hey, mom and dad are in jail again, and we're out of food." I'm like, "Okay." He's like, "I need some money for food." Like, I can't give you money but I'll take you shopping. So I took him shopping, and he used to live in the same general vicinity I did, and take him shopping at a store called Winco. I don't know if you're familiar with it or not, but it's employee-owned store, but cheap. But and he's like, "I've never been here before." I'm like, "You live right down the street. Well, you've never
Yeah.
been here?"
Right.
Okay, whatever. And I'm telling him how the yellow tags differ from the green tags, right? And how to look at the the ounces, the cents per ounce or whatever per unit of measure. And he's like, "Oh, he's 16, right?" I'm like, "Okay, this is how it works, right?" He's throwing lobster in there. I'm like, "Oh, no, not on my watch, brother. It doesn't work that way." I get home, I kid you not, right? We walk in, got the groceries, in a house in a very upscale part of Reno. There's not a stick of furniture in there, right? There's no couch, there's no table. I'm like, what are we doing? Put it in, there's no food in the fridge. I'm like, and I asked him, I said, "Charlie, where do you guys shop?" He goes, "Rayleigh's." Why? I'm like, "You shop at Rayleigh's," and nothing against Rayleigh's, they charge what they charge, but you don't go to the discount store and you don't have a couch to sit on. He goes, "Well, we can't afford a couch because we're poor." And it stuck with me forever. I'm like, in your mind, you're poor, and you live like you're poor. But you
Yeah.
don't spend your money like you spend. Well, that's what the groceries cost. But you didn't take maybe an interest or even know to like, is it worth it, right? And that's why I just consult with a lot of people. It's like, it's one thing to say I can't afford it. Most people in America can afford pretty much whatever they want, really. But is it worth it, right? It's not worth it to me to buy produce at Rayleigh's for 4 times as much as it costs at Wait. It's not worth it for me. If it's worth it for you, God bless you. You get to. But why would you just take that, what God has entrusted to you? Why would you, because you got to bag your own stuff? You don't have somebody, it doesn't matter to me. I used to work in a grocery store. I know how to bag stuff.
Yeah.
Right? So it's just not worth it. So, and that, I think once I got my mind around that concept, yes, I can afford it, but is it worth it? It changed everything. Because then it's like, and it's funny, it's like, I live in a very, very nice home, right? I'm very blessed. But I have 3 couches in that nice home, right? They don't match. And they're all bought on Facebook Marketplace.
Yeah.
I can afford to go buy a nice place, RC Willie, whatever, right? It's not worth it. I
Yeah.
like my couch.
Yeah.
It's fine.
Yeah. Yeah. One of the first episodes I did for the download was on abundant frugality. And there's something incredibly abundant about being wise with your money
Mhm.
and being, frugal in a way, right? There's the
Right.
positive side of frugality. You are investing in your future and your children's future.
Right.
And you're being a steward of the resources that you have. And that's exactly what we're saying is that's when God rewards more provision. He's like, "Oh, this family is wise with the resources that I've given them." I always think of the story of the loaves and the fish, and at the end of that story, so God obviously multiplied the little resource that the boy had. And the disciples were like, dude, this isn't going to work. This guy's only got a few fish. And Jesus is like, let me handle it. He feeds the 5,000. And then at the very end of that, nobody ever talks about this part, but at the very end, Jesus says, grab up all the scraps. Let's not waste anything. And I'm just like, God does not, he does not reward wasters. We should not be wasting the resource we have. That is the unlock for so many people. And it's such a wise word, Mike. It's so important. So many of us are stuck and struggling and not living abundantly because we're wasting the resource that we have.
Right.
That family can have 3 couches. They can have a couch for sure. And they don't, because they don't understand the way that they're spending.
Well, and what was even more fascinating about that is they would never ever consider buying anything on Facebook Marketplace, ever. Oh, I couldn't do that. Somebody else has sat on that couch. I'm like, do you know who sits on it?
Yeah.
I mean, it's like our foster children, right? I mean, we their mother, their biological mother, and when we got that, these 2 girls, we took an interest in the mom, and she's, I just figured she's just very economically disadvantaged. She's just not, she's had a lot of stuff stacked against her. Let's try and take her under her wing and just try and help her out a little. But I tell you what, like our kids, we always bought clothes at the secondhand store. It's just I like. You know how kids go through clothes? I'm like going, this is what we do, right? And you get the cutest kids out of all the rest of it, right? And she was disgusted. She was like so mad. She was like, I'm like, you guys are in this foster care for the money. You're just trying to rip it. I'm like, oh my God, like if you knew me, me, like this is who I am. And these clothes are completely cute and adorable, right? Like these are like Macy's level clothes, right? We can go to Walmart, right, and spend a little bit more, or get these nicer clothes. They're going to be used the first time they wear. I was like, but it's how I can't see it any other way. Well, who would do that?
Yeah.
Right?
It's amazing. It's amazing. You think it's just funny because I think most people think of the ultra wealthy as extravagant or whatever.
Mm-hmm.
But, I used the analogy or the example of, Bezos driving the Honda Accord when he was worth $1 billion, or, Buffett living in the same home for 35 years when he's worth billions and billions. And it's like, it's because we've sort of just like unlocked, like, oh yeah, these things are largely status symbols. They're not actual. It's the clothing that matters. It's not the where you bought them or what they look. You know what I mean?
Yeah, yeah. And so and we all get to choose. I mean, and that's why I can tell you, ad nauseum, and just all these interesting stories. But the thing is, what I also love doing, right, is being abundantly charitable, right? I remember there was an important family in my world, and they had asked me for some help kind of through COVID about, can I cash out my 401k? I kind of have all this debt, and I'm getting da-da-da. And it just really got impressed upon my heart. And I remember it was my last year at CLA, and I got this, my final K1 for CLA, and it was $50,000 more than I expected it to be. I remember, so I was actually in church, and I saw it hit my account. I'm like, what happened? And so I looked at it, made sure it was a mistake, and I leaned over my wife. I go, and I told her, it was all insurance. I said, this is what happened. She's like, oh my gosh. I go, I want to give it to this family. She goes, what? I want to give it to this family. I go, I think it'll change our world. Kind of went to the leadership of my church. I said, I just want you to backdoor this to this family. And they're just like, it was like manna from heaven showing up, and God put on my heart. If I was living in need, if I was all stretched out and overcommitted, I was like, oh, thank you, you saved my bacon. I get to save somebody else's bacon, right? And just let God show up for them, and that is just a blessing.
Yeah.
Yeah, I'm good with the use sofa if I can bless somebody else.
It's funny because, I think we often think of people that are, you and I would be called stingy, right?
Right.
In a negative sense. And it's like, no, we're actually the opposite. We're stingy with the things because we know there's wisdom in that other thing, that other car that I could get that's a quarter of the price, or it's probably a better car. And, the clothing that you're talking about, I was just at a thrift store with my daughter this week. And it's like, and she, she wants to go to the fancier store, but she's like, we make it fun. And she finds really cool stuff at the thrift store that she loves. And it's like, you can get as much as you want from this thrift store. But if we go to this other store, you're going to get one thing.
Right.
She's like, oh, that's great. Okay. So let's do that. And then that same personality trait is like, that's why it's abundant frugality, because then you're like, oh, I know I'm living so within my means, and I'm stewarding the resources that I have, that it's just a joy to give the money away.
Right. Because you're helping move the needle for somebody, and just making, isn't that just a blessing? Somebody's life is better, right? Because you're involved, and you get to, right? And that's where I think, and I've learned that some of the I had this lady, Judson. She came in for a consult. She was a housekeeper at Motel 6 in San Jose, not a cheap place to live. And she says, her name was Alice. She goes, I have my Charles Schwab account. I want to give it to my son and my granddaughter. Like, okay, what's your story? She's like, I'm housekeeper, Motel 6. Well, how much money, Alice, is in the account? It's like $2.3 million. I'm like, okay, now you're going to tell me, how in the world did you get $2.3 million making minimum wage, changing beds out of Motel 6? And she goes, oh, I just save, and I'm, every time those big buildings go up in San Jose, I just buy whatever stock is on the side of the building. So I look at the account, it's Google, Facebook, all from the beginning, right? Just bought a little. Well, I never sold it. Just bought a little. Every paycheck, bought a little, right? And when talking to her, it was like she wanted for nothing, right? She organized her affairs. She had her life set, and she wasn't thinking how terrible it was. So I compare and contrast Alice, right, with who had nothing but had everything, versus these other people that had everything. That the people that didn't have furniture, like her alimony was $90,000 a year. She had plenty. So it's just, you look at those two, and it's all her perspective on it. If that life of abundance, I have more than I need. I am not, and that's just, as children of God, right? It's Jehovah Jireh. He provides. He's going to show up for us. So it's just, what do I worry about? Look at the birds. They don't worry. They just shows up. So what are you all worried about? Just take care of your stuff. Parable of talents, right? Who manages well manages more. So just manage well. Do as best as you can. That means you got to pay attention. And then, but whatever comes out of that, God will figure out.
Yeah. Yeah. A lot of people are this. I think this can be a really great encouragement for people to pay closer attention to their expenses, how they're spending their money. Are they spending wisely? And then also, of course, pay attention to your tax, because there is a huge amount of your family's wealth being siphoned from you, and it does not need to be that way. And you are smart enough to figure this out, and you can find a team. And we're going to link to Keystone CPA underneath this, and we'll also link to your show. It's a Bosma on Business, right?
Yep.
And is there anything else, any other way if anybody wants to get in touch with you?
Yeah, actually, there's actually a link at keystone.cpa. Schedule a meeting. Again, we'll give you an hour. I'll try and make that as productive as humanly possible. Because a lot of times people come in, they're stuck, or like if somebody had their personal finances, Judson, probably the best. Like if they're a business owner, like when people want to help, say, Mike, help me with tax planning. You're in tax planning. I say, okay, give me your business spend, or your personal spend. Give me everything you spend money on personally. And that's how I know nobody ever does it, because they're like, but if you had it, right? Because I can look at that list of everything that you're deducting, not in the business, but just your spending out of your personal, and I can say, well, if you did this, that's deductible. If you did that, that's deductible. If you did that other thing, because that, and that's where, like from a tax plan, I think what people lose sight of is, and I'll just say it's kind of tongue in cheek. I just like, Judson, you come to me, we just met. You're making $1 million a year. I said, Judson, I can guarantee if you hire me, you're not going to pay any taxes, not a dollar. It'll be zero zip, not it. And you're like, okay, I'm in. How do you do that? He goes, just pay me $1 million for accounting fees. You're like, well, that doesn't sound like such a good deal for me. Right. But it's after tax, after fees, right? What you're trying to, like, I'm trying to have something left when it's over. And that's where, if you can, you kind of take that, you're like, if I look at your personal spend, and like, oh, this is when this is deductible, then I'm not spending more money. I think some of the worst advice people give is go buy a new SUV by the end of the year. You know how much an SUV declines in value? It's going to, buy that thing for $100,000. You're going to trade it in 5 years later, it's $25,000. If you lost $75,000, you're better off buying a 5-year SUV for $25,000, forgoing the tax benefit because you're not going to lose the money. Right? And that's where I just tell people is like be pragmatic about it. But if your ability to look at, I'm spending it anyway, and probably, best example, right, is, I'll give you a little live tax tip, right? Who's paying for your home internet?
Me?
Yeah.
Yeah, my businesses.
Okay, perfect, right? Because if you think about it, if I have your background correct, you're doing this from home. Because if you just need internet for home, you can get a little 20 meg up and down, nothing, right? But it's like, no, I need broadband, right? The same thing. I'm in my condo. When I come down here, and I'm down here for work, I have a work meeting tonight, I'm like, I have to have broadband. I can't do it so guess what? The purpose for the expense is business, right? So that's where you just make sure that it's paying it out of the business bucket. Of course you have to substantiate. Of course. But that's where people, when they get sloppy on the substantiation, right? The documentation, that's when they get their hand caught in the cookie jar of the IRS, because they just didn't follow the rules, right? In fact, I'd say, like, right now, October, every person that owns an S corporation, that has the S corporation that owns and deducts the expenses for the automobile, they have to do the substantiation thing. I just sent out my newsletter Tuesday. So if you need it, I'll send it to you. But this is what you have to do. This is my personal use of the business auto. This is my business use. This is a commute. And then the personal use gets included in your W-2 if you're an S corporation shareholder. If you don't do that, it's zero, right? It's zero. So now it's called an accountable plan. So now I substantiated to my employer, who's also you, to my employer, the personal use of my employer provided auto. I included it in my W-2. That is bulletproof from audit. There's nothing to talk about, right? Here's the substantiation, da-da-da-da. You're done. Easy. That's why the IRS, we were talking about audits earlier, Judson. People get afraid from audits because they're not following the rules, because they don't know they exist. Our job is to inform them so you can sleep at night.
Right. Yeah, and each deduction has its rule set. But once you understand it, you understand it. And you're like, okay, so this is how it works.
Yeah, well, actually, it's funny. I had that CPA firm I bought in September 2023. They had people in that CPA firm. They were doing some crazy stuff. They have a Reddit channel on it, and they were talking about all the crazy stuff to all their former employees. Like, I quit because this place is, this is terrible. And I remember looking at that, and so we ended up with a bunch of those clients. And everybody's freaking out. Am I going to get audited, this and that? So I wrote the textbook, basically, on deductions. I said, this is what a deduction is. And then all these special carve-out deductions, meals and entertainment, travel, auto. This is the rule. So did you do this? It's like 4 pages long, but basically it's a primer on every deduction there is. It's not exhaustive, but just code section 162, ordinary necessary. Is it this? If it's not, no deduction. And I'm telling you, it assuaged all kinds of people's fears about what the IRS can do for them. But yeah, and that's where now we use that as, like, people ask you to send them the memo. Here, read it, then let's go through it and see what applies or not, and then just get it in the right bucket. The best thing you can do is pay it out of the right entity.
Right. That's right. Yep. Separate your entities. Don't have your business and your personal expenses all mixed up. Yep. You make it clear.
Absolutely.
Yeah.
Yep.
And corporations get audited way less often than a personal, right?
Oh, it's like 15 times more likely to be audited as a Schedule C than as an S corporation.
Do you have a threshold of when? So let's say somebody starts a side hustle, I guess a side hustle. Like, is it like, I've heard a lot, 50 grand, like you're making about 50 grand. That's the time to incorporate and start doing it. But it could be even earlier, right?
Actually, the game is, there's a little hack for you, right? The game is, whatever you do it in an LLC. Never do a corporation. Always do an LLC. That guy in Detroit. So remember I tell you I had to fly back. The idiot IRS agent, taped a summons to his door. And this is, this guy was already an idiot. And then by the time I got done with him, he was infuriated. He ended up retiring. I think I put an end to his career. But this is what I did, Judson. Unbeknownst to him, right? He was the sole proprietor. He had an LLC with sole proprietorship. I looked at it. That year, the first year, he made $2 million. I was like, oh my gosh, this is stupid. So I did a 3-year retroactive S election, and then I paid his wages, right? And so what that did is it qualified him for this qualified business income deduction, number one. It quashed about $70,000 of self-employment tax.
Wow. Wow.
So that was like a $150,000 swing for this guy. And so when the agent was like, whoa, I get it. It's fine. I go, by the way, here's the S election. Oh, you did an S. I go, I did. A late S. Will you do wages? Yep, here's W-2. I go, and he was literally shocked. He was speechless, which was awesome. And I said, yeah, and I said, I need to inform you that, we need to amend that return because there was no provision for a qualified business income deduction, which is 20% deduction on the $2 million. Oops. So, and he knew exactly what he was so, because he thought he had this tax. I got this guy. It's like, you got nothing, right? So, but that's where it's like knowing how those rules work. That's why by your end, you said, Judson, right? Like if people are making a lot of money, okay, always be in the LLC. I can go backwards. I can't go backward on a corporation. I can go backward on LLC.
Okay, so that's why. So you can't go back on an S corp,
right?
So
right.
So do you prefer LLC?
Actually, I misspoke. So if you do the corporation, if you don't do anything, you're automatically a C corporation until you elect S. If you're an LLC, you're automatically a single member LLC disregarded for tax purposes. You're nothing, Schedule C. So you got the side. So you ask the question: side hustle, LLC. You can go backwards and decide 3 years if you want to become incorporated. Okay, you have this payroll issue potentially, but I'm telling you, it's like that little hack of LLC. Well, now I got my books done. Oh, I didn't. I made all this money. What do? No problemo. Retroactive S election, and then you do retroactive payroll, and then they're going to penalize you on the retroactive payroll, and then the way you get your penalties waived is you say, oh, well, I don't have a requirement. I didn't have a requirement as a single member LLC. I was retroactively given S status. Now I retroactively have wages. So the reason that there was a penalty is my late S election, and they'll automatically grant the waiver request. So all the penalties are waived. So
wow.
Right. So that's the hack, right? Every single one. There's always a path, and so you like, okay, yeah. Oh, there's penalty. Oh, but if I can get them waived, right? We have a standard form letter. Send it off. They waive them. Done. Okay. But that gives you. If all of a sudden you found out you made a lot of money, you can fix it with that LLC late S election. And that way, usually this time of year, with people that have those single member LLCs, you can decide if, you can decide if I want to do the late, then we'd tell them, well, let's just do payroll by the end of the year. The other thing that you want to think about as a side hustle is decide if most of the people, they do single member LLC, California's community property, Nevada's community property. So, there's an election so that you don't have to file a partnership return as 50-50 with your wife or husband, as the case may be. But there's sometimes you want to make an affirmative election into what's called subchapter K or partnership taxation so that you can pay your state tax out of the entity. Everybody misses this, Judson, everybody. So I've got my side hustle. Maybe it made $100,000 this year. I may want to be an S Corp. I don't know. But what you absolutely want to do is file a partnership return with your spouse, and then pay the tax, pay the $100,000. That's $13,000 of California tax at the highest bracket, right? That you're going to pay, and it's 9.3%. So you're going to pay, call it round numbers, $100,000 of earnings. You're going to pay $10,000 of California tax. Pay it out of the LLC. You get it then deducted on your federal tax return. It saves you $3,700, right? For fun, for filing a partnership return, right? So then those are all those little, and yeah. And I know this stuff off the top of my head, but it's complicated as heck.
It is complicated, and I think I've mostly tracked with you, but I think one of my main takeaways is, well, one of them is that you can retroactively. So let's say there's somebody here listening to this who hasn't really done tax strategy, hasn't really done tax planning well. And I would say there's probably a lot of those.
A lot of them, right?
Yeah. Um, and w- they can go back retroactively and handle taxes from 3 years ago, right? So
Right, 3
you
years.
can do
Yep.
3 years.
Yeah.
That could be massive for people. We're talking hundreds of thousands of
Right.
dollars.
Right.
Okay, so that's a great hack, but then also the LLC hack is incredible.
Yeah. So whenever somebody comes and asks about how to start a business, just get an LLC. Yeah. Yeah. In California, you got to pay your $800 a year annual fee. I get it. The reality is, and you know this because you started yours from scratch. I've started businesses from scratch. Just having that separation between you and a creditor alone, is worth it. Just but take your entrepreneurial endeavor seriously. Strive to make money on it, and that's I think the thing I love about entrepreneurship is I guess my working definition for entrepreneurship is deciding your own outcome. Decide how much wealth you want. Decide what you want to be able to do or accomplish in your business or for people or for your team. I had an employee. I was telling you about a personnel issue I had kind of percolating today,
Yeah.
and in this lady's resignation letter, I think what she said was, she says, "I will pray for your soul that is so fixated on money." That's what she said to me. And I thought, number one, I'll always take a prayer. Thank you. you know, but what I think she missed was, we've got 33 people, and I take very seriously each and every one of those team members' lives and livelihood. I mean, it's what we do this for. We're kind of our goal at Keystone is for the benefit of our clients to make sure that they have the best experience they can have and have better lives because we're involved. And the same, the team is that they have this great life and career that they can't have anywhere else. That we really are fertile soil for great things to happen. And I take that responsibility very, very seriously. It's their lives and livelihood. So, and it's all interrelated, right? You can have one person, right? And that's what happened, right? You had one person that wasn't doing their job, and then there was about 6 people that were suffering for it. And I'm just like, it's not fair to them. It's not okay. You're now negatively impacting these people because you're not doing what you're supposed to do. So go do what you're supposed to do. It's just how it is. I don't need to apologize for that. I'm sad that she took offense to it, but at the end of the day, right? We're all servants. Me too. For these foster kids, we have a nanny, and I remember I was taking her to school, and she has taken college classes as a nanny, and I'm taking her to school because she doesn't have a driver's license yet, and she's kind of taking her time. And it's like I had a standing 9 o'clock meeting with 33 professionals. And so I was like, I got to get her to school, get to the office so I can be on camera for my team's meeting. And she's like, well, it's not really big of a deal because you're the boss. And I just said, well, number one, I don't want to be late to a meeting because that's disrespecting 33 people that
That's right.
took the time to be there on time. But I go, the reality is I serve all 33. I work for them, right?
Yeah.
Every day I come here trying to figure out how to make their life a little bit better, how to make their career a little bit better. And I think that servant leadership, right? And it made me sad. She didn't see it. Like, okay, maybe I got to up my game. But I think as business owners, I think we have the ability to positively impact so many people, customers, the team, people's lives, and that's where it's like it's an honor to be able to do these things.
Yeah, that's a great word. I have because I started out in ministry, and then I was in Hollywood and doing the acting thing and whatever. And when I got into business, I sort of had this negative picture of business, and I realized as I was starting a business, I was like, wait a second, this is an incredible ministry opportunity. And your business is helping all of these people fund their lives. And the business that I created, that I co-labored with God on, is putting that kid through college or whatever it is. It's such an incredible opportunity for ministry, and I don't think that's spoken about enough. But we've been going at this for an hour and a half. I definitely need to have you back because I feel like we scratched the surface. But that is so. This is Michael Bosma. Check out the links below, and if you need help with tax strategy and tax implementation, he's definitely an incredible place for you to land, and I would recommend it. This has been the download, and as always, seek first the kingdom of God, and all the rest will be given to you. That's the pod.
Amen.
I'll stop the recording here.